Hello traders. Obviously there's still a lot of event risks this week that can change market structures, but I do see a few interesting charts for shorter intraday type opportunities for the coming sessions. I'll be looking at gold, silver, crude oil, and a couple dollar pairs. Let's dive in. Starting with gold, the breakout has reached the 261.8 fib extension yesterday with RSI reading at 76.5. And it also stretched more than 5% away from the 20-day moving average, with 5% being the 2 standard deviation level. And interestingly, the 1-month risk reversal, which is this purple line, has diverged against the rally over the last 2 days, which is signaling that the bullish sentiment has weakened as it's made its advance above the 3,500 handle. Not that I'm arguing for a trend change or anything, which is possible if market expectations unwind from dovish extremes, but purely from a technical standpoint, it is quite short-term overbought, and that puts me on watch for some counter-trend setups on the lower time frames, specifically looking for the 35.50 level to reject any further pushes higher. Similarly, silver is starting to look a little overbought on this leg and is reacting off the 41 handle, which for me, it's a big psychological number, which is a common pattern around the big levels like the 40 level here. And if you think of this 40 figure as a band with 39 and 41 on either side. For instance, the 39 handle in recent months has served as strong resistance, like we see here, which in fact was a level that I traded off on quite a few occasions where we see price action react quite nicely from those levels. We are also starting to see a reaction at the 41 handle today, and puts me on watch for some short-term counter-trend opportunities. Diving deeper, we are seeing a lot of chop around this 40.75 and the 40.90 area, and should we start to lose these levels, I think there's an opportunity to chase this momentum to the downside. Shifting over to crude, it sold off yesterday on chatter that OPEC will be discussing a production hike at the next meeting, contrary to the narrative that discussions were leaning towards production cuts on oversupply concerns not so long ago. Nevertheless, I do see very good levels here, and technicals do favor range lows. It's retraced to the 61.8 fib today, and coincidentally the bottom of this band, of which I've marked as a major pivot area that's marked the range highs in April and May, and of course has been very well tested over the past month or so. That would imply that we have very strong support here and a potential range low here to trade off. Looking at the Kiwi, it's had some choppy trading recently, but a failure once again at the 0.59 handle is keeping the technical bias to the downside. Also, Kiwi data has been rather weak, including a very weak GDT auction just a couple of days ago. Looking a little closer at the recent price action, the 0.59 handle has been recent support, of which we've seen a rejection from to start the new month, and we're also seeing a rejection of this area today. That rejection makes for a fairly convincing continuation signal of trend, and while there is some support just above 58.50, a break lower should I return back to the 0.58 handle. Lastly, the Swissy. This is more of a higher time frame look on this one, as I'm really focused on the breakout move for this pair, but nonetheless, there is some interesting price action setting up. For example, yesterday we printed a bearish reversal bar, which is in itself a fairly strong price action signal. However, I think this one should be taken with a pinch of salt. For example, we have this descending channel consolidation, a bull flag if you will, after the bullish impulsive move back in July, and the structure basing out at the 0.8 figure. A breakout here should see a 200 to 300 move to the upside, targeting these sorts of levels. But alternatively, if we do see some weaker US data this week, we should see a slow grind back lower to the recent base around 0.8. Also, the Swiss did see a weaker than expected CPI earlier, which should help to support this pair, but it will really be all about the incoming US data. So should be some good action left in the coming sessions, with some interesting pivot areas that we're seeing across the charts. That's all for now. If you found this insightful and interested in seeing more content from us, please give this video a like and subscribe to our channel. And if you're a serious trader that's interested in joining a private group of professional traders that's always looking for a little bit of alpha, check out the link in the video description. Thanks for watching, and good luck trading.